2022 has been a crazy year for the stock market. There have been a ton of ups and downs, and it's been hard to know what to do with your money and how to invest it to get the best stock market returns. But there is one kind of stock that might be a good choice no matter what's happening: dividend stocks. But not just any dividend stocks from large companies that are trading at bargain prices, giving us both high income from dividends and potential stock increases in 2023 and beyond. And for this list today, we've got a stock that's currently yielding almost 8%. But we're not out of the woods yet. Experts say that the economy might be headed for a recession in 2023. And there are a lot of other things going on in the world that could affect the stock market as well. The war in Ukraine, the Federal Reserve and interest rates, unemployment, and the elections. Dividend stocks, though, might be a good choice as they can provide us a reliable source of income even when the market is going through tough times. If you're looking for some good dividend stocks that are likely to do well no matter what happens with the economy or around the globe, you might want to consider these 5 options. They're all well positioned to weather whatever the market might throw their way in 2023. All of them have at least a 4% dividend yield, which means that they'll start paying you a decent amount of income right away. Be sure to stay to the end of the video as we reveal the number 1 on our list that yields almost 8%. And to keep updated, be sure to subscribe and hit that notification bell so you can be amongst the first to know when more investment inspiration videos are available. Now, let's get straight into the content. Starting off at number 5, on the bottom is 3M Company, ticker symbol MMM. 3M is a company that makes a ton of different products that we use in our daily lives. I'm sure you have some scotch tape, heard of post-it notes, and had a time when you had to use some ace bandages. Those are all from 3M. They also make things like equipment for dentists, safety helmets for those out in the construction site, and those famous N95 masks that everyone was wearing during the pandemic. Yep, 3M makes those too. In fact, they have over 118,000 patents for their inventions. Even though 3M is a successful company though, their stock has had a tough time in recent years due to economic weakness and some legal issues. This has caused 3M's stock to drop to its lowest point since 2014. However, the company has continued to increase its dividends every year, and now they have a 4.7% dividend yield. In addition to their dividend though, there are also many reasons to be hopeful about 3M stock. Right now, their shares are being sold for just 12 times their future earnings, which is much lower than what they've typically sold for in the past. Overall, 3M is a trusted company with a long history of success and a ton of patents for their inventions. While their stock has faced some challenges recently, there are still many reasons to be optimistic for its future. The steady dividend and the low price of the shares makes it worth considering as an investment. Next on our list, we have Intel Corp, ticker symbol INTC. It's been a rough year for chip makers, especially for Intel. When the pandemic hit, there was a huge increase in demand for laptops and tablets. However, there wasn't enough supply to meet that demand. Now, the situation has flipped. There's too much supply and not enough demand, which has made it hard for companies like Intel to sell their chips, and that's caused prices to drop. Even though things are tough now, Intel is still in a great position. They're a much bigger company than many of their competitors, and they have the money to invest in new technologies. This means they'll be ready when the chip market picks back up again. Plus, the government is helping companies like Intel build new factories in the United States. While Intel stock may not be worth as much as it used to be, it does offer a nice dividend of 5.4%. This could be a good deal, especially if you think the chip market will improve in the future. So, even though there have been some challenges for Intel lately, it's still worth considering as an investment. Next on our list, we have Enbridge Inc., ticker symbol ENB. Now for our list today, this is the only company that hails from Canada, and it is an energy company that transports energy, like oil and natural gas, through pipelines. They have a huge network of pipes that goes all over North America, and a lot of the oil and gas we use actually comes from Enbridge's pipelines. They also have other businesses that help with energy, like storing it and using it to make electricity. Even though the energy industry has been facing some challenges, Enbridge is still doing very well. This is partly because it's difficult to build new pipelines due to rules to protect the environment by the government. This makes the pipelines that Enbridge already has more valuable. In addition, Enbridge has been careful with its money and hasn't borrowed too much, which has given them a strong financial foundation. This has allowed them to continue paying dividends to their investors even when other companies had to stop. Right now, if you invest in Enbridge, you'll get a dividend of 6.6%. Overall, Enbridge is a reliable energy company with a diverse range of assets and a strong financial foundation. They've been able to adapt to the challenges of the industry and stay competitive, which is a good sign for the future. Overall, Enbridge is an investment worth considering for the dividends. We just have two names left on this list of large companies positioned well for 2023 that pay large dividends. Remember, we're almost there to our leader of the board paying almost 8%. But if you like what you're watching so far, be sure to let us know what kind of stocks you want us to find to make future videos on. Now, back to the final two. Coming in at number 2 on our list, Verizon, ticker symbol VZ. Verizon is a massive company in the communications sector. They're one of the 3 biggest companies in this field in the United States. In the past, people thought that investing in companies like Verizon was a safe bet, but recently things have been a bit more difficult for them. Both Verizon and its main competitor AT&T haven't performed as well as some people have hoped. The industry that they're in, which is primarily phones and internet, has slowed down a bit, and it's been more expensive for them to keep doing what they do. Even though things have been tough for Verizon lately, it might still be a good idea to invest in them. Their stock is being sold at a really good price right now, and some people think that Verizon will start making money again in 2024. Plus, if you buy their stock, you'll get a big dividend of 6.9%, which is one of the highest on the market. So even though there are a few challenges facing Verizon at the moment, it might still be a good investment opportunity. Overall, Verizon is a huge company in the communications industry. While they faced some challenges recently, there are still good reasons to consider investing in them. Their stock is being sold at a favorable price, and some people think, again, they'll be starting to make money soon. Plus, that generous dividend does make it worth considering as an investment. Now, finally at the top of our list, coming in at number 1, paying a dividend of 7.6%, we have New York Community Bancorp Inc., ticker symbol NYCB. New York Community Bancorp is a regional bank that knows how to make its mark in the Big Apple. Located in New York City, this bank has built its success by lending money to apartment building owners in the city. While these loans may not be the most high yielding, they come with relatively low risk due to the stability of the housing market and rental prices in the city. In fact, during the tough financial crisis of 2008, New York Community Bancorp managed to stay profitable and continue paying dividends to its investors. Talk about resilience. Recently, the bank received a green light for a merger with Flagstar Bancorp, and the deal was finalized on December 1st. This is exciting news for the combined company, as it's expected to see a significant increase in earnings in the near future. And if you're considering investing in this bank, now is a great time to do so. Currently, the company's shares are being sold for less than 8 times their expected future earnings. And of course, they offer that wonderful 7.6% dividend for their shareholders. With its focus on low-risk apartment building loans and a bright future ahead thanks to their merger with Flagstar Bancorp, this bank is sure to be a smart choice for any savvy investor. So don't miss out your chance to grow your wealth and make your money work for you by looking at New York Community Bancorp and giving it a closer look. There you have it, everyone, the top 5 stocks positioned well for 2023 that pay a high dividend. For more dividend-paying stocks, be sure to click the playlist for all the top dividend stocks on our list for 2023, and I hope to see you in the next video.